हमारा सफलता आपकी The SME Growth Platform from India's largest stock exchange.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Went Live, India's first digital live streaming business news service. Well, these are the top headlines that you're tracking at this hour. It's a strong start to the trading week. The Nifty trades around the 10,850 mark, and all the sectoral indices are trading with gains. NCLT dismisses Cyrus Mistry's plea against Tata Sons, says no merit in allegations against Ratan Tata or Soonawala. Sterlite Technologies gained for the third straight day. The company has acquired 100% stake in an optical fiber cable manufacturing company in Italy. The stock has surged 20% in the last 3 sessions. And heavy rain cripples life once again in the maximum city. The weather department warns of heavy showers to continue over the next few days.
That's all that me and Sumeet can tell you is that if you're in Mumbai, be careful. But if you are careful and watching your markets and watching your stocks as well, you tune into the right platform. What the markets are doing today is pretty interesting. About 0.75% in the green for the Nifty. The Sensex and the Nifty Bank too have given company. In fact, the Nifty Bank has done much better, I presume. Will come up on your screen, the Nifty Bank. I think it's got gains of about close to 1%. Yeah, about 1% for the Nifty Bank, trading almost at the highest point of the day. So good day for the banks and being supported by the PSU banks as well. Not that they are the reasons why the Nifty Bank has moved up 1%, but Nifty PSU banks are doing reasonably okay for themselves. Let's bring up the advanced decline ratio. Okay, this is the PSU banks 1.7, and just bring up the advanced decline ratio before we get to the heat map. Fairly healthy, close to 3:2 in favor of the advances, which is actually not bad at all. Better than 3:2 actually, 3:1, almost 3:1. But let's get the heat map and show you what's moving the indices today. Commodities by and large were doing reasonably okay at the start of the trading day. Then pharma is doing reasonably okay for itself. But banks, Axis Bank 2.5%, Yes Bank about 4%, Reliance is up about 1.5%, which is giving that bit of support to the markets. Strength in Sun Pharma and Dr. Reddy's, so good going here. Vedanta is up about 2.7%. Tata Steel started off well at the start of the trading day. Hindalco is up about 1%, and not enough losers, save for TCS, which nudged fresh highs in Friday's trade and has just done a temporary pullback, I would presume. We don't have too many losers in the session today, which is actually a pretty good sign. Just before I talk about the mid caps though, bring up what the European markets would be doing in the session today, just to give you a sense of what the world markets are doing like. Asia shut shop on a fairly decent note, and Europe is doing reasonably well at the start too. But let's bring up some individual pockets of gains and strengths and losses before I hand it over to Navneet for the liquid market. Stocks like Sterlite Tech and a few others are doing exceptionally well in the session today. So these are the top movers: Time Technoplast, Sterlite Tech, as well as Indocount. Time Techno up about 14%, really strong show by this one. But Sterlite Tech, after an 8% move in Friday's session, up another 9% in the session today, or 8% in the session today. So really good going. And amongst the losers, I think the likes of Den and Hathway continue to fall. There's just no respite that is coming in for these stocks after what Jio announced in last week. But Navneet, what about the more liquid universe?
Well, Neeraj, the markets are rejoicing that you're back in India.
Thank you.
It's green not only in India, it's across the globe. We've seen good gains for the Asian market indices in the morning. We also saw a positive opening coming for the European markets. But back home, it's been great because we've crossed the 10,850 mark, and Bank Nifty, as Neeraj was suggesting, is outperforming. We've actually seen some fresh long positions coming up for Bank Nifty futures. If you could just pull up that, look at the open interest build up 22% higher. It is appearing on the higher side. Let's see how much of that is carried forward when we actually get the final data in the bow copy. But the futures are trading with a discount of nearly 43 points. Pull up the Nifty futures as well, which so far have been trading with the premium. Remember, the premium has not gone up so far for the Nifty futures, so watch out for that one. 10,858 is currently where the spot Nifty is trading, and overall majority or all the sectoral indices today have been trading in the positive territory. territory. In fact, Nifty's crossed the recent high of June 25th that we'd seen of 10,831. That's a positive sign. On the option side, 10,800 call strike, which is sitting with maximum open interest. I'm a little surprised since the markets are up 80 to 90 points. One would have expected that there could be some unwinding for the 10,800 call strike, considering the call writers of this strike would have gone ahead and unwound their position, but that's not happened. So it looks like maybe there is some buying which has emerged despite of markets conquering that level. On the put side, there is writing coming for the 10,800 as well as the 10,900 strike, and even on the call side, some addition today has been seen for the 10,800 strike, which is added 10,900, pardon me, that's added nearly 3 lakh shares as we speak. So the options picture is telling you clearly the next mark to be watched out on the index will be somewhere about 10,900, and some of the technical analysts who have been coming on our shows today, they've mentioned 10,930 will be a crucial resistance mark for Nifty. Some of the stock futures, TCS is in focus. The numbers come out tomorrow. Ahead of the numbers, some weakness seen in the stocks. Open interest has gone up. A lot of options activity has also been witnessed in this one. But if you look at the futures side, there is open interest increase of nearly 10 to 11% last when I checked. So 13% right now, telling you there are some fresh shorts being built up on this one. The options data is giving you a range of somewhere between 1,800 to 1,950 on this one. Just Dial has seen fresh long positions in today's trading session. Open interest for this one has risen significantly. The gains that you're seeing on this counter is also on back of high volumes on the cash side. 4.5% higher for Just Dial. And the other one, which has been under pressure since the last 3 sessions, is Apollo Hospitals. Remember, there was an acquisition news on Friday. Since then, the stock's seen some bit of weakness. On the futures side, open interest for the second straight day has gone up. I remember there were fresh shorts, or rather short covering actually seen on Friday. Today, 25% higher, aggressive shorting coming up for Apollo Hospitals, Neeraj.
Well, interesting names out there and interesting moves out there too. But as we said, it's a lot global in nature as well, the kind of moves that we see. And because it's the first day of the week and we kickstart the week with a global voice as is the norm, joining us today is Craig Erlam. He's Senior Market Strategist at Oanda. Joins us right now on the show with his thoughts on what's happening across the world and what are the repercussions for the EM pack at large. Craig, good having you. Thanks so much for taking the time out and speaking to us. If I can, let me start off with the impact that the fund flows are having on EMs by and large. I mean, we've seen that happening in currencies and the weakening EM currencies against the dollar. But even the equity markets, save for a couple of markets like India, are not showing enough resilience over the last couple of months.
No, it's been quite a surprise that we're not seeing the kind of resilience that many were expecting. I think many of these emerging markets are far better positioned to deal with things like a tightening rate cycle in the US and elsewhere than they were even a few years ago when we did see that kind of taper tantrum, which did have a big shock for emerging markets. I still think they are better positioned to deal with it, and I still think they will deal with it. This initial weakness, I think, is being driven by a sharp appreciation in the dollar, which I don't expect to last in the longer term, and then we should see some less serious impacts in the currency markets. I still think some have the potential for weakness. We look at Turkey, I think the political situation there is extremely concerning, but I think overall we will see them do okay in the longer run.
Hi Craig, good afternoon to you from India. We did get to see strong jobs data coming out of the US markets, and probably that was one of the reasons why markets this morning have reacted positively. All the Asian market indices and also some of the European market indices have been trading pretty much in the positive territory. But what I wanted to check from you is, have the trade war fears been digested now after the first round of implementation from both the countries, US and China, have taken place?
Yes, I think to an extent they have. I think markets will remain sensitive to any signs of escalation on the trade war front. I think what we have to remember right now is that what is priced in is what has now been implemented, but also to an extent what has been threatened, this idea that we could see another $500 billion of tariffs implemented by the Trump administration and possible retaliation. A certain amount of this is even starting to be priced in as well. And this is going to take time for the details to be drawn up. So I wouldn't be surprised if if markets do become a little more desensitized over the next couple of months. But I don't think they're going to be completely immune, because ultimately, if this trade war does escalate between the US and others, everyone will be a loser.
Interesting. You know, part two of that global picture is also the response that North Korea gave very, very recently, wherein they're almost asking US not to meddle too much and try and bully them. You know, the world was almost working with a belief, Craig, that the geopolitical tensions are out of the way. Is that too much to expect right now, or would you believe that normal rhetoric notwithstanding, geopolitical tensions are indeed out of the way?
I think the reaction to the US-North Korea summit just shows that despite what many think we are eternal optimists, that we do think that such a long-standing issue can be resolved in one meeting between Trump and Kim. And the reality is very different. One of the major concerns coming out of that summit was what denuclearization meant to both parties. And I think what we're seeing now and what we've seen with these comments, and I expect this to continue, is that both sides aren't necessarily entirely on the same page, and we are going to see these little stumbling blocks along the way. If ultimately it leads to an agreement and we do see full denuclearization in North Korea and the prospect of peace between the two countries, then I think ultimately we have to look at this as a success, but I think that's a long road.
Craig, I'm just going back to the topic of emerging markets. We've seen FI selling into Indian markets for a while now, but we've been interacting with a lot of foreign investors, and the view coming from that community is that selling is not India specific, it is EM basket specific. So what's your reading been? And we've also heard that the money is actually more moving towards China now.
Yeah, I mean, I think I completely agree. In the near term, people are a little bit cautious on emerging markets because the Fed is tightening at a much faster pace than markets had previously anticipated even a year ago. The dollar has appreciated over the last few months more than many had anticipated, and that has delivered this minor shock for emerging markets, and it's not an India-specific problem. And I think also the prospect of a trade war and what that impact that has on China and potential for growth there, and obviously there's a number of countries in the emerging market world that are heavily reliant on China for trade. They are suppliers for many of the products that are made in China, so it tends to have negative repercussions for the entire region. And I think you look at a country like India, and that's just been engulfed in this whole basket, as you say. I don't expect it to continue. I think you look at a country like India, and I think there's great prospects for high levels of growth. We are seeing slowly but surely these reforms taking place, which in the longer term are going to positively impact the country. But it just means that in the near term they are likely to see setbacks as a result of trade tensions and rate increases in the US, among other things.
And all these tensions settle down, Craig, can we expect the trend to change in the second half of this calendar year? Can we expect more of FI money coming back into our markets?
I think we will. I think what we have to remember is that, like I say, a lot of this trade stuff is now priced in unless we see further escalation, which I think in the longer term we probably will before it settles down. But at least in the medium term, I think things will settle down just a little bit. I think a lot of what the US central bank is going to do is now priced in. I don't expect them to go above 3.5% or there or thereabouts for a fair amount of time. And I think a lot of this is now priced in by markets. So you have to ask yourself, what is the potential risk factors on these two scenarios? And I just don't see them. Don't get me wrong, there is potential for other risks to materialise, and Europe is of course one of them. But I think, like I say, from now till the end of the year, I wouldn't be surprised if we do see a bounce back in these emerging markets.
We hope for that. At least the bulls hope for that. Craig, Erlam, many thanks for joining us today and giving us your thoughts. Really appreciate your time.
Thank you.
The senior market strategist at Oanda, with his thoughts on markets and currencies, believes EMs could bounce back as well. Well, Indian markets really haven't corrected too much. 10,854 is almost as good a level as we've seen in recent times. The only problem point is that the mid caps and the small caps are not really generating enough wealth and traction and sustained traction alongside, and that's been the real pain point. I was yesterday after coming back, I was looking at a bunch of companies which have dramatically corrected YTD compared to the Sensex. On the website, we have this feature which compares the stock price movement to the Sensex, right? And the YTD returns or the 1 year returns. the milk companies, the dairy companies. So the outlier out here is probably Parag Milk, but Prabhat, Heritage, Hatsun, 25, 30, 40% YTD corrections. And these are companies which were touted as pseudo FMCG companies, which will show that 10-15% growth year on year, every year. 40% correction in the stock price.
We were getting a lot of brokerage notes for these companies that there could be the next FMCG.
Yeah, I mean, I can understand quality. There are some specific issues.
Quality has another issue.
Yeah, but others, I mean, Prabhat Dairy is down to 40%. Forget quality, that's what I'm saying. Forget quality, but Prabhat Dairy, Hatsun Agro, Heritage Foods, look at the kind of cuts YTD that have come into these companies. And there's some serious pullbacks. And Sterlite Tech, we're talking about how it's gained, Navneet, so much for the last couple of days. The stock is down from 380 odd levels, went down all the way to 265. And this is a company that is promising almost doubling of profits in the next 2 years. There's some serious carnage that are happening both in promising stocks and in companies which have disappointed over the last couple of months.
Even the fundamentally sound companies were correcting when the broader markets were correcting, right from the likes of HEG, Graphite. Nothing globally for them have changed. In fact, I remember we've interviewed one of them, Graphite, during the last quarter. They said they're booked out for the first 6 months in terms of contract. So fundamentally, nothing has changed. I think there were some factors related to, you know, these companies coming under additional surveillance measures by the exchanges, and plus obviously the carnage that was being witnessed for the entire space, broader markets, and that led to the fall in even a couple of the fundamentally sound companies. But not to forget, we'll be getting the first quarter earnings for FY19, so probably we can see a new trend emerging as to how the earnings pan out, at least for the start of FY19. I just want to pull up one stock, Max Financial. I think it's almost at day's high. It's seen gains of nearly 8 to 9% right now, so 8.5% higher for this one. Max was up on Friday as well. I think it's some bit of cash-based buying that you're witnessing, because I've not seen much of traction coming in for the futures of Max Financial, so watch out for this one. Okay, now let's pull up an interesting company, Linc Pen and Plastics. Not a fairly usual name, not a very liquid name either. In fact, just 1,500 shares traded. But the reason why we decided to try and speak to the management today is that after what's been a rather muted FY18 and maybe quarter for FY18 more importantly, almost all people who track this company believe that this could well be a year of a bounce back. Joining us on the phone line is the Chief Executive Officer, Deepak Jalan, to talk about whether this could indeed happen or no. Mr. Jalan, good afternoon. Thanks so much for joining in.
Good afternoon.
This is Neeraj here. Good afternoon. You know, as I said, one of the key reasons why I thought we could have this conversation and start off with that is that the couple of notes that we've read on your company seem to suggest that after what's been a rather muted FY18 and what Q4 FY18 in particular, the worst seems to be behind and the growth will rebound. Are you of the same opinion that FY19 could well be a year, and would Q1 FY19 be the harbinger of things to come?
Okay, first of all, let me explain that, compared to FY17, FY18 has been moderate for us, mainly for the reason that the polymer prices really, went up steeply. There was a steep increase, unusual increase. And in the meantime, we've been developing, products, more value-added products, so that, we are insulated, by these the polymer price increase. So we've developed several products in the last year, and you could see some benefit of those products in the last quarter. And certainly, we expect that the benefit, we will get the full benefit of those products in the current year as well as going forward.
Hi, Mr. Jalan. Good afternoon to you. Well, where FY18 was kind of a washout for several factors, as you mentioned, higher polymer prices. You also set up a new facility in the state of Gujarat, because of which your interest and depreciation cost had gone up. But crude prices, sir, I think which constitute nearly 40% of your raw material cost, have still been on the higher side. So have you been able to mitigate that risk of higher crude prices, or once again we can see the margins coming under pressure for the first quarter?
Yes, so the new products which we have developed in last couple of months, they mitigate the risk of polymer price increase. So that's the reason for our optimism.
So what's the kind of margin guidance that you can give our viewers and also to your shareholders? I guess the margins posted by the company in FY18 was 8%, which went lower if I compare it from FY17 of almost 9.3%.
So, okay, so let me talk about the EBITDA. You see, in FY17, the EBITDA was 9.4%. And in FY18, it came down to 7.9%. So which I would say it was not a very steep decrease. But of course, as the new investments in the Gujarat facility, so overall the profits went down drastically. But at the EBITDA level, it was not so bad. And so, like in the current year, we believe that we should be able to catch up with our FY17 level. And yeah, this is what we expect.
Mr. Jalan, please correct me. FY18, didn't your EBITDA come on to about 25 crores versus 33 crores in FY17?
Yeah, so the EBITDA was lower, certainly, yes.
So obviously, I mean, while on the top line, I could still understand that the numbers look reasonably okay. On the EBITDA and the bottom line, the numbers or FY18 did look a bit weak compared to FY17, and hence, I think at least where I'm coming from is that where do you see FY19 to be like? Yeah, a year of rebound it could be, but what kind of numbers do you envisage to clock in? EBITDA, net profit, maybe even the top line?
So top line, we are targeting at least 15% growth over last year, and EBITDA level, or let's say PAT level, certainly we would not be able to catch up with the FY17 level, but we are expecting minimum 50% increase, compared to the previous year. I mean FY18.
50%, Mr. Jalan, for PAT?
Yeah, PAT. I'm saying PAT. Yeah, we expect to have an increase of minimum 50%. 50%. So over FY18.
Your profits to be in the range of 14 to 15 crore for FY19?
About 12 to 13.
12 to 13. All right. My next question is on rupee depreciation. Can we expect some benefit from the export side of the business on back of that? And also, are you facing any sort of heat with regard to domestic business from cheap Chinese imports?
No, we are not affected by any Chinese imports. And of course, the devaluation of the rupee will help us a little bit, not to a large extent, but it does help to some extent.
Okay, and what about the debt reduction plans? Your debt went up last year because of the new facility. If you could just tell us what's the capacity utilization now from the Gujarat unit, and also what's the debt reduction plan?
So we, last year we installed 20 machines. And they are running full capacity, and we have a total capacity of 50 machines. So, and in this financial year, we expect to add another 15 machines. And so by next financial year, all the 50 machines are expected to be installed. So this is where we are.
Okay, and how much of debt can we expect that the company can reduce for FY19?
We don't expect to take any more debt. Of course, we have a term loan of 18 crores, which we, as per the schedule, we expect to pay back in 5 years. And the additional capex, we hope to, meet with our internal accruals.
Okay, sir, we'll leave it at that note. Appreciate you joining us today and telling us what's happening in FY19, where FY18 was not so good for the company due to higher polymer prices. But remember, crude prices have been higher even at the start of FY19, and they continue to be so. Let's see how the export side of the business does on back of rupee depreciation. But the guidance which management gave is 15% growth one can expect on top line and 50% growth on bottom line. A PAT figure of somewhere between 12 to 13 crore is the guidance coming from the management of Linc Pens. Not too much in today's session. 300 is the level. It's a company with a market cap of nearly 450 crores. Okay, moving back to the markets, it's 10,850 for the index. But moving ahead, even as foreign investors pull money out of Indian markets, domestic flows have kept equity markets afloat. But even that easing off, data released by AMFI, or the Association of Mutual Funds of India, shows inflows into equity mutual funds declined for the second straight month in June. Jayesh Kilnani is standing by with the data. Jayesh, over to you.
So Navneet, the data is in fact pointing to a little concerning situation, but not alarming, I would say. If you have a look at the total fund flow picture, we saw an inflow of about 46,500 odd crores for the month of June, and the May and month of March saw just over 50,000 crores of outflow. But the entire year has been quite volatile, because April and Jan saw more than 1 lakh crores coming into the market, and the 2 months that I told you have seen outflows as well. Now, if you look at the equity inflow picture, that has dipped actually month on month for the second straight month. So 9,660 is what we have received in the month of June, which is lower than the number in May, which in turn is again lower than what we did in April as well. And if you have a look at the 9,660 crore number in the context of the last 6 months, what you will see is that it's just the second highest from the low point as well. Now, this is the balance fund picture, and this is the one that is really the cause of concern, because for the month of June we have received only 1,482 odd crores as total inflows into the balance fund schemes. Also, if you compare it to the Jan number, which is 7,665 crores, that is quite steep. The cut you have seen, the downward slope as well. In fact, each of the months in this quarter, or the first quarter of the financial year, we saw a decline in the inflow as far as the balance fund numbers are concerned. If you have a look at the net asset or total asset under management, that is not too alarming, because it's remained steady, largely steady. For the month of June, we did about 22.86 lakh crores. Which is tad bit lower than the month of April, which was the record high of about 23.25 lakh crores. Now, if you look at the equity AUM, that has actually seen a dip for the second straight month. So 8 lakh crores is what we had done for the month of April. May saw a little bit of decline or remained largely flat. But if you have a look at the June number, that has come in at about 7.3 lakh crores, which is substantially lower from where we were a couple of months back.
And what about the different fund houses? Any feedback that you're getting about the fall that one has seen in the month of June?
So Navneet, I did speak with a lot of CEOs of fund houses. The common factor that they told me was that this is largely attributed to the market conditions, and most of them actually expect a bounce back once the market actually stabilizes. If you have a look at the individual quotes, the one from Radhika Gupta that we got was that even though it's been a 2-month decline, but it's too early to assess the trends, and she expects that the SIP book going forward will actually provide support for the market. The other quote that we got from was Ashish Somaya. Now, he believes that the flows will actually rise once the market stabilizes, so we'll have to wait and watch for that. And lastly, we had Sunil Subramaniam of Sundaram Mutual Fund, wherein he has made a very interesting point that there are no new investors, or rather new investors are a little hesitant to come into the market right now, but the existing investors, they are showing no signs of panic as of now.
Well, let's hope that continues. I think in about 5-6 days from now, we'll also get a sense of what the SIP flows have looked like, Jayesh, and that might give us an indicator or indication of what the existing investors are doing. We may not see SIPs getting pulled off so soon, because the large caps are still doing okay, but it'll still be interesting to see the trends within the SIP flows and whether they have changed or no. Okay, just before we move any further on the markets, I know it's about time. A lot of queries would have come on the social media as well, but an important verdict. The Supreme Court has upheld the death penalty awarded to the Nirbhaya case convicts. Arpan Chaturvedi joins us on the phone line for more on this. Arpan.
That's right. So last year, if you remember, the Supreme Court in May 2017 had upheld the High Court's decision to award death penalty to 4 convicts. 3 out of those had filed this review petition in front of the Supreme Court, and today the Supreme Court bench, which is headed by Chief Justice of India, Justice Deepak Mishra, and he had only heard the last petition where the Supreme Court had confirmed the death penalty. So once again, he's rejected the review petition. The Supreme Court has said that review should be accepted only when there is an error apparent or there is miscarriage of justice, but the petitioners cannot be allowed to re-argue the whole case. So that is what the Supreme Court has said, and it had also given example that the convicts got elaborate hearing when the Supreme Court had confirmed the death sentence in May 2017. It had heard the case for 38 days. So after all these grounds, giving all these grounds, the bench headed by Chief Justice of India, Justice Deepak Mishra, has rejected the review petition against the death penalty awarded, which was filed by 3 out of 4 convicts.
Okay, Arpan, we'll leave it at that note. Thanks a lot for joining us and giving us an update on the Nirbhaya case. Well, moving back, shifting focus back to the markets. In fact, Bank Nifty has seen a lot of strength. In fact, in today's trading session, some fresh long positions are definitely being built up here. But let's get in our technical experts and check with them as to what sort of cues that one can expect in terms of levels going ahead. If we have Hemen Kapadia with us right now, okay, he's there with us of KRChoksey. Also, we've got Sumeet, Bagadia, Associate Director at Choice Broking. Good afternoon to both of you, gentlemen. Hemen, let me come to you first. So far, you were shying away to take any naked position on the futures, be it Nifty or Bank Nifty. You were playing for a range. Today, we've conquered that 850 mark also on Nifty. What should be the next strategy going ahead, and what's the next level that you're watching out on Nifty?
A very good afternoon to you, Navneet. Yes, I think, frankly speaking, we are on the cusp of a breakout after a prolonged consolidation. 10,850, 10,900 was important, and like you mentioned, Navneet, we started the settlement on a relatively low rollover, and we've been gradually building a position, whether it's Nifty and Bank Nifty. Bank Nifty significantly, we started with 17 lakhs. As of now, we're at 25. So significant open interest positions have been added. So it's that seems clearly like a positive. So I have a buy call on the Nifty, but I have it through a call option, Navneet. Buy the Nifty 11,100 call option at around 17 with a stop loss of 11 and a target of 29. One can even look for pure futures call, Navneet. But like you mentioned, I think the Bank Nifty looks a shade better than the Nifty this time around.
Hemen, why calls? I mean, you're not going naked longs because it is difficult to pinpoint whether the market will definitely have an update tomorrow or not?
Yeah, see, Nina, the earlier high was 10,930, and I don't think we've closed about 10,850 ever from a 2-day closing point of view. So I have a feeling that there might be one small hiccup before it actually breaks through, but you know, the AD line has improved, mid cap, small caps are recovering, it's across the board, so it does seem much more reassuring. But like I said, the only worry, if any, is that 10,930, the earlier high, needs to get taken out, and we're getting there, but we're not exactly there.
Okay, Sumeet, what about you? Would you look to buy Nifty and Bank Nifty at current levels?
Hi, good afternoon. Yes, you are absolutely right. We have been buying Nifty from lower levels, and now looking at the chart, it seems that the same view will continue. From here on, we can see an extended move till 10,900 or 10,950 levels in next couple of days. So for a trading perspective, those who have taken long positions at lower levels, they can hold on the existing long positions. If there is a small dip of around 20 to 30 points from present levels, and that should be used as a buying opportunity, with a stop loss to be placed at 10,770 levels on lower side for the upside target of 10,900 levels. And if 10,900 is taken away convincingly, then we can see extended move till 10,950 levels in next couple of days. As far as your question on Bank Nifty is concerned, yes, Bank Nifty has given a breakout. Closing over 26,500 will take Bank Nifty to 27,000 levels. Looking at the chart, it seems that today the type of move which we have seen will take Bank Nifty index to 27,000 levels in next couple of days. So for a trading perspective, one can initiate long positions in Bank Nifty at the current market price. A dip of around 100 points should be used as buying opportunity, with a strict stop loss to be placed at 26,500 levels on lower side for the upside target of 27,000 and 27,100 levels.
And what about the stock specific strategies for the day?
See, stock specific, the first call for the day is Asian Paints. The stock has given a breakout, and it seems that from here on we can see a move till 1400 or even till 1420 levels. So for a trading perspective, one can initiate long positions at CMP. If there is a dip of around 10 to 15 points from present levels, then that should be used as a buying opportunity. Downside, it has support at around 1320 levels. So that should be the stop loss for long positions for the upside target of 1400 and 1420 levels. The second pick for the day is SBI. Most of the banking stocks are looking good to me. As far as PSU banking space is concerned, SBI seems like from here on can give a move of around 10 to 15 points. For a trading perspective, one can initiate long positions in the counter at 260 or 261 levels, which is the current market price, with a stop loss to be placed at 255 levels on lower side for the upside target of 272 and 275 levels.
Hemen, your stock-specific trading strategies?
Yes, Navneet, I think a couple of stocks which look good. The first one is Canfin Homes, Navneet. We've been oversold. The stock is showing positive divergence. We've seen a volume spike up coming in today. The MACD on the daily chart is giving a buy. So we are playing for a bounce, Navneet. And we've seen some around 3% OI built up in Canfin Homes. So buy at around 342, stop loss 332, target 362. And the second stock which I like is VML. Buy in VML at around 835, stop loss 825, target 855. Once again, 2 rounds of positive divergences on the mechanical indicators. Deeply oversold, high top, high bottom on the daily chart. It's set for the recovery. There's even positive divergence on the weekly charts now need. So looks good for a clear bounce.
Okay, interesting. Stay on, Jamin. Let's get in Mr. Sanjiv Bhasin. He's Executive Vice President for Markets at IIFL. Joins us right now on the show with his thoughts. Sanjiv, good afternoon. Good to be talking to you. Thanks for taking the time out. Sanjiv, what's the, it's a bit of a repeat question from what I asked you the week before last, but strangely the correction in the mid caps and the small caps and specific stocks which are facing some bad news continues despite the market looking up about 0.75% as well. Is it now finally time to put in money to work at the broader end of the spectrum? Because even in good quality names, the corrections has been fairly deep and has continued in last week too.
Yeah, hi. So yes, Neeraj, this is definitely the time to buy the mid caps, because every fund manager worth his salt is hiding in large caps, and they think that just protection of money will be the key going forward. We think the worst is over. India has been an outperformer, and you played everything. Bond yields at 8%, crude at 78, oil rupee at 69.5. So I don't think there is anything major left. I think results will beat all expectations on the upside, and on the ground level you're seeing extreme positivity, whether it's autos, consumption, or it is the lending cycle. So I would definitely be looking to buy mid caps, because when there is blood on the street and everyone is hiding in large cap defensives, then this is the time mid caps can outperform. I would say from here, by the end of the year, mid caps can give you at least a 20 to 40% upside, depending on what stock sector. But overall, I would still say that markets are looking extremely good for the next 90 days.
Extremely good for the next 90 days. Are we to presume, Sanjiv, that select names could do well, and therefore what are the pockets that you believe could do well? Because the reason I asked you this question is the last few times, and for the right reasons albeit, for the last few times when I've spoken to you at this forum, you've been a proponent of large cap names. The ITCs, the Tata Motors, the HULs of the world have been the stocks that you've recommended. Are you finally getting down to recommending mid caps?
Well, I've also been giving you mid-cap ideas, and I'm extremely bullish on that whole gamut. So whether it's a Voltas or a Havells or a L&T Finance or an IDFC, you can just go on the whole gamut. Look at or in large caps, you still have room, a large part of the room on the two-wheeler side. I think Bajaj Auto, Hero MotoCorp, don't miss any fall to buy that, because there is an extremely strong flavor of MSP, rural spending, very good monsoon on the anvil. So you buy a mix, but mid caps will definitely on a beta base give you much more. So look at an Ujjivan, look at an IGL, look at an MGL. I mean, that whole gamut of mid cap stocks have got beaten out of that quant of shift between trying to get out of mid caps and saving your money by buying the HUL and the Reliances of the world. They still might, you could see a new highs on the Nifty in this next 60 to 90 days. But I think the mid-cap indices will outperform. So this is the time to put your money to work. And if you have conviction, stay with the conviction. Dilip Buildcon is another idea on your channel. When there was consecutive down circuits, I was telling you that the fundamentals are extremely good. and the company is one of the best, largest proponent of the L1 order contracts, and I see no let up in that stock. In fact, I would be surprised if we don't get 1,000 in the next 1 year on that stock.
Okay. In fact, Sanjiv, we did speak to the management of Dilip Bilkon on Friday, where they said that they would be receiving money from Shrem, which they've actually given a presentation to the exchanges as well, the pending money of nearly 610 crores. And they've categorically mentioned once the projects are completed, they will be looking to transfer nearly over 4,000 crore of debt to Shrem. But let's see what happens. But the stock definitely has rebounded from those lows that we've seen of almost 450 rupees, which was seen as early as in this month itself. And from there, we've seen a rebound to almost levels of 722. Sanjiv, I want your views on Sterlite Tech, a stock which is in news today, and in the last 3 sessions we've seen some good moves coming about. Obviously today, by now we know why the stock's up. They've acquired an Italian company, and most of the brokerage notes have indicated that the deal will be EPS accretive right from FY19. Your thoughts on it?
So Navneet, firstly, optic fiber is in a very, very strong space. You've heard from the likes of the big daddy Reliance, and optical fiber broadband he is going to get across the country, and it's been 2 years since he's been in this capex. Sterlite Tech has been a multi-bagger in the last 2 years. I see no reason why it cannot gain 40% from here. Purely on the back that there is a demand mismatch, and whether we see power, whether we see other infra, optical fiber is going to be the bandwidth user. You've got data, which is the new gold, and I think that this is now a necessary conduit. So yes, I would say that if it is, I've not studied the details of the present takeover, which the company they have acquired, but if it's value accretive from day one, then I think there should be no let up. On the other hand, the stock has moved up sharply. If you do get a bad day and a decline, look to buy it. But Navneet, we are missing the woods for the trees. If Reliance is going to be one of the FANG stocks, or aspires to be, he's already heard the likes of Amazon and Netflix, and the vision which he has is far encompassing for the next 5 years. So if you are looking for Reliance, not for $100 billion, but maybe a $200 billion company, to just stay invested and stay put. And that would be the gamut for a large number of other Indian corporates that stay invested right through the volatility, which may be because of oil, rupee, or the upcoming elections in the next 6 months. But if you took a slightly longer term view, you just can't go wrong but be invested in Indian stocks.
Sanjiv, the question that comes in as to what's the size of opportunities in pockets like Sterlite right now. People were riding very big on Sterlite Tech with 4G. Now there is talk of 5G coming in a big way. I mean, China and US being engaged in that war notwithstanding, India at some point of time will have the 5G enabling devices available in a big way compared to what's available right now, and that opens up a new pocket as well. Are these companies, the Sterlite Tech for example, is it a company that you will be happy to buy and forget for the next 3, 4, 5 years?
Definitely, this is the whole, if you had invested in this stock 1.5, 2 years back, when this whole bull market was aspiring to go, and you had an inclination what Reliance would have done. Look, Neeraj, for 5 years, Reliance did nothing. And in 1 year, it is more than doubled. So don't try and time yourself on the businesses. The businesses are very, very strong, whether it's a Sterlite Optical or a Reliance, depending on the size, depending on the aspirations. And in no way are you going to be, the apple cart is going to turn because of slight volatility, because of elections or other. The game plan is clear. Every politician or every political party is looking for growth, and the growth is there despite the encumbrances. So I think firstly we are in a huge bull market. You don't have the type of data war you're seeing. Reliance is gaining market share. You've got 21 crore people and aspirations by 2020 to be 50 crore. So just the sheer numbers is going to drive up huge amount of businesses which are correlated to that. And like you said, I think it's a no-brainer. And similarly would be all the other ancillary industries which are related. I mean, look at auto numbers, look at Bajaj Auto, look at Hero MotoCorp. And you're talking of rural spending now accelerating because of monsoon, because of MSP. You can't but go wrong. Your choices are limited to these 3, 4 players. And their volumes and margins are going to make them drive, laugh their way to the bank.
Okay, in fact, Axis note on Sterlite there clearly mentioned this could be a proxy play to the communication capex that we get to see going ahead. That's the view on Sterlite Tech. Hemen, quickly, I just want a view on ICICI Bank. I was just looking at the open interest. I could be wrong here. If you look at the July futures, I think the open interest is nearly 13 crore vis-a-vis the average open interest that we get to see for futures, which is somewhere about 7 to 8 crore. Are you witnessing anything, on the charts of ICICI Bank? Because participation definitely on the future side seems to be on the higher side.
Absolutely right, Navneet. The futures is showing something really big happening, but the charts are not showing the same amount of enthusiasm. 267 is important support for ICICI spot, Navneet. That doesn't look like breaking, but it probably the lull before the storm. Maybe there are OI built up in futures just before the move starts happening. But currently on the charts, Navneet, nothing exceptional. It's meandering aimlessly, nothing much happening, to be honest.
Interesting. Sterlite Tech, Hemen, on the charts?
We remain bullish. Firstly, disclosure, we have fundamental coverage on the stock, Neeraj. Looks good. We're running into a brick wall at 330. Long-term outlook is very positive. But currently, I have a feeling that we are in a corrective phase, and we've ended one intermediate correction, and we are heading towards with corrections. Like I said, 330 and 354. Support comes in at 307, 277. Longer term point of view, I think price target of 500. But this is a 12 to 18 month point of view. I have a feeling we'll go up and come down, consolidate. It's going to take some time, but currently positive.
Okay, Sanjiv, I have one final question. Maybe Navneet has one more, but one final question really. Since we were talking Jio and Sterlite Tech, I want to talk about Jio and the broadband companies, Hathway and Den. Now, valuation-wise, a Hathway or a Den would be trading sub the valuation of a cost of customer acquisition. To be honest, I think on that valuation, they're probably way below those levels as well. A large portion of the capex is behind them too. However, just when the capex seems to have ended, they're running into Jio. Is it a battle that they will definitely lose, and therefore no matter what the price is, it's best to avoid them? Or could there be merit in looking at it because of the vast consumption potential available, and therefore the market being large to accommodate everybody, including a Jio and these players as well? Which side would you tilt towards?
Well, it's a glass half full, half empty. Like you said, the sheer weight of the population may give everyone a chance, but the aspirations which Reliance Jio has and the way they can kill competition, that's not funny. So you can go through the pain, you'll last, but who wants to be in stocks which are which are going to be binding against a mountain? So it's best to be with Jio and look to play on those. I don't see too much of competition lasting. You've already seen the likes of what has happened to the numbers on Idea and Bharti, despite them being very, very strong balance sheets and promoters. So like I said, it's a glass half full, half empty if you do look for value. But Neeraj, the problem is there is enough value in a lot of other stocks and sectors where enough visibility will give you easier ways of making money rather than bang your head against a rock, And I would continue to think that Reliance still needs to be re-rated. $100 billion would be one landmark. But if you saw the aspirations and if you saw the threat, what was Amazon 10 years back, or 5 years back or 3 years back? It totally upset the Flipkart, Apple cart. And like I said, till you didn't get a bailout from Walmart, you would have still been struggling there. So I think capital is scarce, and still you want to be with the market leaders and look at more visible stocks and sectors where this type of intense competition may not put you in a weak spot going ahead.
Okay, Sandeep, just sorry, there's a query coming in from a viewer named Sandeep Joshi on YouTube. Sanjiv, I'm just going to take the last question to you. He wants a view on Action Construction. You've already mentioned you like Dilip Bilkon. Now, this is a company which makes construction equipment. I don't know if you have coverage on it or not, but from a longer term horizon, would you advise somebody to buy the stock?
Yeah, so I don't have coverage on this, but I would think that construction equipment and construction construction activities at a very strong momentum, whether it's government capex or we've seen some of the private players. But Navneet, here I would like to suggest a stock which I've often suggested, and that stock has underperformed, called NBCC. NBCC is proxy to almost 40,000 crore of orders which they have on the Naroji Nagar and other 5 colonies which they are developing on government land. And there has been a NGT stay order on that for the next 15 days because of the tree pruning effect. The company is guided that they are going to install new machinery and the trees will be replanted. And I think definitely there is going to be a positive verdict on that. The stock has taken a beating. But if you look at the variables, there is a 40,000 crore order book. They make almost 9 to 11%, which means 4,000 crore on a balance sheet of 180 crore, and over the next 5 years. So you can't have but a stronger visible stock on construction. So I would tell him that at 70 rupees, NBCC has a very good chance of doubling in the next 1 year, and try and put your money there.
Okay, Sanjiv, we'll let you go on that note. Thanks a lot for joining us and taking us through your views on the markets and also on a couple of individual stocks. Well, moving on, Mahindra & Mahindra has hit fresh highs in the current trading session, but the automaker may not have run out of steam just yet. Yash Kapadia has the analysis for us on today's Chart of the Day segment. Yash, over to you.
Thanks for that, Navneet. So, shares of India's largest agri-equipment manufacturer, Mahindra & Mahindra, they have gained for a 5th consecutive day to hit an all-time high of 940 rupees in today's day of session. Now, the stock has had a fantastic run so far this year, outperforming the Nifty Auto Index significantly, having given returns in excess of 24% versus a negative 7% return given by the Nifty Auto Index. Now, despite of this stellar run, the stock currently trades at a 12-month trailing price-to-earning multiple of just 13.5 times, which is at a discount of nearly 30% from its 5-year average PE multiple of 19%. Now, going forward, the management aims to increase its market share in the domestic tractor market to 50% and also increase the share of its global business to its total revenues from 37% currently to 50% over the next 2 to 3 years. In terms of analyst recommendation, 43 out of the 44 analysts tracking the stock on Bloomberg have a buy rating on the stock with a consensus target price of a little over 1,000 rupees, indicating a potential upside of nearly 8% from the current levels. Back to you.
Well, thanks a lot for that. It was a consensus idea sometime this early morning on the charts as well. So do watch out for M&M. Do watch out for HDFC Bank as well. They've reported a multi-quarter low CASA ratio. What's the likely impact of this on the margins of the lender? And lots more, really, not just about the margins. Shraddha Babla has analyzed what they've released and is here to tell us. Shraddha.
Well, yes, so Neeraj, this is the first time that HDFC Bank has actually shared updates on its quarterly parameters ahead of its first quarter earnings. Remember, the bank does report earnings on 21st of July. Now, the key takeaways are with respect to its CASA ratio, which has come in at 41% at the end of June as compared to 43.5% at the end of March. So at 41%, the CASA ratio seems to have dipped to a multi-quarter low. What could be the reason for this? It could possibly be that the higher interest rates are attracting higher fixed deposits, and hence the share of CASA deposits have come down because the fixed deposit growth has been much higher. The implication for this could be on NIMs. Now, the management in the previous quarter had guided for NIMs to remain in the range of 4.1% to 4.4% in the near term. Remember, for the last 5 quarters, the margins have remained above 4.3%, but a lower CASA ratio in the June-ended quarter could mean we could see some impact on the NIMs. However, they will remain within the guided range, is what the analysts say. The second bit of data that they've shared is with respect to the deposit growth, which has come in at 20% on a year-on-year basis, which is a good number. There is the second consecutive quarter that we've seen a 20% plus sort of a deposit growth for HDFC Bank. Advances have grown at 21.9%. 2%. So that seems like a good bounce back, because the March ended quarter had seen a YOY loan growth of about 18.7%. This could possibly be because of market share gains in the retail business. And remember, the bank has been talking about good refinancing opportunities as far as the corporate book is concerned. And they've also updated that they've bought loans worth 9,700 crores in the June quarter from HDFC under the home loan arrangement. So overall, most of these parameters seem to be broadly in line. Hence, you're seeing a muted stock reaction, but a slightly lower than expected CASA ratio, which could have implications for NIMs and a decent loan growth and deposit growth number from HDFC Bank.
Okay, Shraddha, thanks a lot for bringing all those details. In fact, I was perplexed when I saw those flashes, because the numbers are yet not come. They will be coming out later during this month. These are just the quarterly updates for the first time, which HDFC Bank has given. Just want to get some technical views going on a couple of stocks. Just Dial, remember we highlighted the stock for you at the start of the show. There's significant amount of open interest build-up that we are seeing. The stock's been able to maintain, or rather sustain, the gains that we've seen, 4.5% there. Sumeet, on the charts, is it indicating any sort of fresh breakout on the charts for Just Dial, or it has just bottomed out? Because I remember the stock had corrected also a lot.
See, the stock is giving good move. There is a possibility that we might see some more upside from present levels, but it has major resistance at around 630, 635 levels. I think till the time these levels are not taken away convincingly with volumes, and there should be some supportive news at the time of breakout. If everything happens together, then there is a possibility that the stock can give a very good upside move. Till the time we don't see any such thing happening at 630, 635 levels, it's better to avoid long positions above 620 levels. Those who have taken long positions at the current market price or at lower levels, they can hold on the existing long positions, with a trailing stop loss to be placed at 585 levels on lower side for the upside target of 610, 620 levels in next couple of days.
Interesting. Okay, gentlemen, stay on. So much more to talk about. As we get ready to hit the break, the Sensex is up almost 1%. Yes Bank and Axis Bank, amongst others, are doing well. But I must say, Asian Paints is climbing up the ranks, 3.2% now. The third top gainer, and Reliance Industries at 997 is packing a serious punch as well. Take a break on that note. Come back here on Countdown and tell you about the Fab 4 stocks of the day. At 3:15, we'll tell you what dealing rooms are recommending in the session today, and then some closing strategies as well. Chipped in. Stay tuned.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you, and funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
The promise of GST was a bold one. Has it delivered? Join BQ as we take a deep dive into the year gone by, from our vantage point to yours. Watch the fine print GST special all week only on Bloomberg Quint.
Welcome back. Just 27 minutes to go for markets to close, and looks like it's going to be a strong closing, at least for our markets. 10,850 for Nifty, 26,750 for Bank Nifty. So good going. Even the broader market indices have been doing pretty well. Let's just do a check for the European market indices before we go across to Yash. It's been a positive start, actually. Looks like all the market seems to have shrugged off the trade war fear. So Europe too has opened in the green, but remember the gains that one saw for the Asian market indices, Shanghai closed with gains of nearly 2.5%. So Europe in front of that is a little bit muted, but still staying in the positive territory. And a lot of stocks back home moving around. So let's get going and tell you which are the Fab 4 stocks on Yash Upadhyay's list for the day. Let's go across to Yash to find out the same. Yash, good afternoon.
Good afternoon, Navneet. The first stock on my list is actually a borrowed one. I'm talking about Sterlite Tech. Now, this one's up about 9% after the company said that it will acquire 100% stake in the Italian optical cable manufacturer Metallurgica in a deal worth close to 50 million euros. Now, the company said in its press release that the transaction is EPS accretive from day one and is expected to be completed in the coming 2 weeks. Brokerages too have given it a big thumbs up. V-Mart Retail is up about 9% today after there was a report from Jefferies over the weekend. They believe that the company is a big beneficiary from the hike in MSP prices announced by the government last week. Now, they derive close to 65% of their revenues, 65% of their stores, they are located in the mid and small cities, and 85% of their revenues, they come from the sale of products which are worth less than 1,000 rupees. So they believe that V-Mart Retail is a big beneficiary. GVK Powers is the only stock which is locked in an upper circuit in our list. It's up about 5% after the company said that it has achieved a financial closure for the construction of the phase 1 of the Navi Mumbai airport. And lastly, we are also looking at Asian Paints. This one had hit a lifetime high of 1,362 in today's day of trade. The stock has been gaining for the last 3 trading sessions, and volumes too, they have come in at the higher end of the 20-day average. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. I also want to pull up SRF. I think it's just gone up in trade, and we've seen good traction, good buying momentum, which has been seen for SRF in just last few minutes of trade. It's at day's high, sitting with gains of 5.5%. Hemen, very quickly on the charts, any breakout that you're seeing on SRF at current levels?
Seems more like a bounce. The breakout comes in at 763. We're 30 points away from that. A mini breakout has come in at 1705 now.
Okay, 1732. A bit of a bounce for a stock that has really gotten clobbered in over the last few months, I would say. Actually, Sumeet would want your chart check as well out here on SRF, suddenly up in trade.
See, the stock has given a sell-off in last couple of days, and now at lower levels it has taken some support. It has supported around 1610, 1620 levels. I think till the time these levels are not taken away, it's better to avoid selling positions in the counter. And those who have taken long positions at lower levels, they can hold on the existing long positions. Looking at the chart, it seems that from here on there is a possibility that we might see some upside move, in which we can see levels of around 1780 or 1800 levels. So one can hold on the existing long positions with a trailing stop loss to be placed at around 1690 or 1700 levels for the upside target of 1780 and 1800 levels.
Okay, hold on. If you've bought SRF, that's the view coming in from Sumeet, which is sitting with gains of over 5% in trade. But time for us to bring in our next guest on the show, independent market expert Dharmesh Kant joins us now. Hi Dharmesh, good afternoon. Things are looking good at the start of the week. We bounced back quite sharply for both. The front lines of obviously doing better than the broader market indices, but they too have seen good gains coming by. I want to start off this conversation with TCS. The numbers come out tomorrow, and We were getting, technical buy calls on this one until last week, but this morning we've seen some bit of correction ahead of the numbers. What are the expectations that you have from the earnings of TCS tomorrow?
Yeah, good afternoon. The market has actually started on a very positive note, and as we run into the earnings season, so there would be a build-up of positive traction coming into most of the stocks after having significantly corrected. So a bounce back or 5-7% kind of a move on mid cap and small cap is likely to be there. At the same time, the sectors and stocks which have run up very hard and going into the earnings, we will see profit taking happening, and that I think should be the scenario with the IT stocks. TCS, as far as it is concerned, I'm not expecting any surprises out there. Management never gives a commentary, but as far as the numbers are concerned, I mean the guidance part of the numbers, so that won't be there. But 6 to 8% kind of a constant currency growth is what I am looking at, and if they do that, it should be a good, healthy kind of trajectory which has been maintained. So nothing on a double-digit count, and I don't think there won't be any sort of indication which says that the growth can move to a double-digit kind of a factor. So that won't be a scenario with any of the large cap IT stocks, be it TCS, Infosys or SCL Technology for that matter. So more or less, and the run-up has been quite hard, very hard run-up has been there in TCS, Infosys, so profit taking and then the consolidation will happen. Any negative commentary, which is very unlikely, will have a severe thrashing on the stock, which we all know, but I don't think there won't be any negative commentary. It will be more to do with the currency factor, which they are benefiting as of now, and how they look at the currency, risk factor getting mitigated in the event of INR getting appreciated going forward into the next 2 quarters. So lackluster kind of earnings environment will be there as far as technology is concerned. But that is my sense on the space.
Dharmesh, good afternoon. What's up with V-Mart Retail? Why is it that the market loves this so much?
Yeah, good afternoon. See, excesses are always done in the market, and as far as DMart Retail is concerned, they have been running pretty high of the valuation multiples. So if you look at the valuation multiples, it looks unlikely to be justified, the price, the stock price which is there. But usually, if you look at historical background of many companies which were in the nascent stage of a high growth trajectory, high growth I mean 50 to 60% kind of a PAT growth trajectory when the stocks are witnessing consistently over a period of say couple of years. So then the PE multiple does run in excess of 100% kind of a growth, and I do think for DMart 2 more years are there, Dharmesh, 2 to 3 years are still there, where they can maintain this 60. Yeah.
Dharmesh, sorry, I just didn't want this confusion. I was actually talking about V-Mart, not DMart. I understand. I mean, I appreciate your answer about DMart, which is Avenue Supermarts. But what about V-Mart? Do you look at V-Mart at all?
Yeah.
Because the market seems to be loving that to 9% up today, or in fact 10% up today, trading at new life highs.
V-Mart may be catching up with the valuation of DMart, but the growth which DMart has exhibited is not there in V-Mart, and it won't be there. See, it's a very old. Actually, if you look at the entire genesis, V-Mart was the first to roll out the retail kind of a chain. They started as Shriman Srimati in Cuttack, where average ticket size, I mean the products which they used to sell, basically garments, was 500 to 700 kind of rupees. They still have stuck to that, catering to tier 2, tier 3 and tier 4 kind of a cities, and their expansion is good. Balance sheet, everything is very clean. I mean the cash flow management, there is nothing wrong out there. And in the consumption theme, when with the monsoons, the way it is being rolling out, and all other macro policies from the government for the upliftment of, upliftment of earnings of the poor people or the rural area people, that's already been there. The cash subsidy, the direct expenses, the MSP prices which have been raised. So all those themes just looks like running into the favor of V-Mart. Valuation wise, I think it's also fairly priced. There's no scope more there to have a higher trajectory. But when big guys come out with reports, you do have a buying traction coming in, and excesses are always done. So this is more to do with that. Fundamentally, it's a very sound company with a sound management, and they have been progressing well on the chart. But as of now, going forward for next 2-3 years, whether you will get a 70-80% kind of a stock price return, I doubt that.
Okay, a lot of stocks moving around. I guess Hexaware has hit its lifetime high. Let's just pull up that stock. It's sitting with gains of 8.5%. That sudden gain has just come in the last 5 to 10 minutes of trade. I was just looking at the exchange's website. I think the numbers for this one, they'll be coming out on 24th of July. So that's still 2 weeks away. And ahead of that, we've seen some strong buying momentum in Hexaware. Sumeet, is there any indication on the charts? Is something happening in Hexaware? Can one look to buy at current levels?
See, it's a breakout in Hexaware. Hexaware has given a one-way move in last couple of months. Now it has broken its recent highs and it has given a move with volumes. I think looking at the chart, it seems that the same move and the same trend will continue for next couple of months. Those who have taken long positions, they can hold on the existing long positions. Immediately 500 will act as a psychological resistance for the counter. Once the levels are taken away, there is a possibility that we might see a fresh upside move above 500 levels of around 8 to 10%. That means 540, 550 can be the target in next couple of weeks. Those who have taken long positions, they can hold on their long positions. One can initiate fresh long positions if there is a dip of around 10 to 15 points from present levels. Downside now, the support for the stock is placed somewhere at around 470, 475 levels. That means till the time 470, 475 levels are not taken away, one should initiate any dip in prices from present levels as buying opportunity for the upside target of 540 levels. Immediate resistance is placed at 500 levels. Once it gives closing above 500 levels, we will see move till 540, 550 levels.
Well, the stock continues to move higher. It's up 10% in trade. Can we also pull up the futures and check if there's any sort of build-up which has come about on the Hexaware futures too? Because it is the top F&O gainer as we speak. That's Hexaware for you. 8% high, 8.5. Looks like more of cash-based buying. So we look out for the internals post-market hours on this one. Well, in terms of stocks which can enter into the F&O ban for tomorrow's trading session, one stock that we've been talking about is Just Dial. There's a lot of open interest build up, though it was not close to getting into the F&O ban. If you look at the open interest as a percentage of MWPL, that's market price position limit on Friday, was just 71. And this, for a stock to enter into the F&O ban, it has to breach the 95% mark. So on the July futures, there have been significant build up and also on a couple of option strikes. So watch out for this counter for tomorrow's trade, as today it has been sitting with good amount of gains of almost 4%. Well, let me also tell you, it's come off the day's high, the levels that we've seen during the session on Just Dial.
Well, interesting. And now, so those are a few stocks to monitor. Actually, Hemen, can you give us a sense of what could happen to Just Dial in such a scenario?
Unfortunately, Neeraj, Just Dial is along with Jet and a few of the stocks, they're perennially in ban. But if we were to sort of disregard the F&O data for the time being, Neeraj, I think it looks wonderfully poised. We've had a prolonged consolidation in Just Dial. We're on the cusp of breaking out. Obviously, the ban would, you can't take fresh position that would sort of stagnate the stock, but otherwise, we are heading towards Neeraj 640 and more. We spent around 6 weeks of consolidation. Stock looks good. I think it's set for a takeoff. But once again, I think the F&O ban could sort of spoil things. And take a slightly longer term view, 350 to 650 Neeraj, this range has been there for the last 1.5 years. I have a feeling it's a bigger turnaround. Just Dial can surprise big time from here.
Okay. Let's wait and watch. Maybe some near-term disruptions, but Hemen believes the long-term, the charts at least look fairly good. Let's try and make sense of what dealing rooms are recommending in the session today as well. It's 3:15, about time that we do that. Darshan Mehta is waiting by with his channel checks. Darshan, good afternoon. What are you learning?
Yeah, good afternoon, Neeraj. I think mid-caps overall have been doing well. It's a relief rally that's come in. Some of the mid-caps has been spoken about. Kaveri Seeds has been spoken about. It's managed to recover from the lows of the day on heavy volume. Almost 6 lakh shares have been traded and decent OI built up on the F&O side. There's a buzz of a potential corporate announcement that could come in. That's something that dealers are watching out for. Two stocks in which there is domestic funds that are accumulating. One of them is Bharat Forge, which is up almost 3%. And Yes Bank of late has been doing well. It's been outperforming the private sector banks. So these are the two counters in which dealers have indicated that domestic funds have been accumulating. And the last stock that's been spoken about is HPCL. One of the large foreign brokerages is actively recommending this stock to its clients in terms of bid being cheap as far as valuation is concerned. So HPCL is something that we are watching out for.
Okay, interesting. We'll watch out for all of these names. Thanks a lot for that, Darshan. Any thoughts here on OMCs, Dharmesh?
Yeah, OMCs are at best avoided. See, this has been my concern right from the beginning. Though we have seen in the last 4-5 years a great run up in OMCs when the petrol and diesel prices were deregulated, but the overhang of regulation is always there on the head of OMCs. And see, the sense is whatever windfall income which came from the crude prices getting corrected so sharply was to be utilized in a more prudent way. So, but that's not the norm. The prices can again spiral up, and that is what we are seeing. And sooner or later, my own sense is crude may go to 80, 85 on the WTI front. I'm not talking about the NYMEX crude. So if it goes to that, and then you have this again subsidy thing coming back into the play, so there won't be a big play. So it's more or less a trading bet, a good correction, and you see overnight crude prices getting corrected 4-5%. The other day you will get a rally. Traders may participate in the merrymaking, but that is it. It's not at all a fundamental buy till our country is delinked from import of crude. So that stability will not be there because so many natural things are concerned there. So we don't have that much of reserve, or the entire industry moves to electric vehicle kind of environment. So just a trading bet. You can play the trades based on technical factors. Nothing fundamental about it.
Okay, talking of trades, actually a couple of stocks which are looking very, very interesting. Sumeet, Bagadia, about 8 or 9 days ago, a lot of bets were placed on RBL Bank at about 555 odd levels. Maybe you placed one too. Now currently at 578, up 2.5%, trading at life highs or fresh 52-week highs at least. What would you do with an RBL Bank if you have an existing long position?
Hold on the existing long positions, because the stock is giving a very good move, and looking at the chart, it seems that the same upside move will continue. I think one should trail the stop losses and should carry with the long positions. And if anyone wants to initiate a fresh long position, then also one can go ahead and initiate the long positions, because the stock is looking good on charts. Immediately the support for the stock is placed at around 560 or 565 levels. A closing above 580 will take stock prices to 600 or 620 levels. I think in next couple of months we are going to see a move around 8 to 10% from present levels. Move of around 8 to 10% from present levels. So it's better to be on the long side, and one should trail stop losses and should carry the long positions.
Hemen, there is a query from a gentleman called Ravi Shankar Adebala. He's asking for a chart check on Yes Bank. He's wanting to know if we can take fresh long positions at the current market price for the July series.
Neeraj, not without a correction. 333 to 367 in the spot in 4 trading sessions. Should I tell him to go fresh longs after the stock has moved 40 bucks, 35 bucks? No way. Yes, looks good. There's no doubt on that, but we are at around 363. I would wait for a cool off till 350. Otherwise, though it may go up, I'm not sure if the risk reward ratio is in favor. And the intermediate high was at 369, Neeraj. I don't think there's too much of a headroom here without a correction.
Okay, that's the chart check coming in on Yes Bank, but just 10 minutes to go for markets to close. So let's quickly get you some closing strategies from our technical experts. Sumeet, let me come to you first. Any BTST or any STBT for tomorrow's trade?
So few stocks are looking good to me. I think it's better to be on buy side because Nifty is strong, and looking at the chart, it seems that we will see upside move only. HCL Tech has given a breakout. It has broken the recent highs, and it seems that it will give closing above the recent highs. Closing above 960 will take HCL Tech prices to 980, 990 levels in the next couple of days. So for a BTC trade, one can initiate HCL Tech at current market price, that is 961, 962 levels, with a stop loss to be placed at 950 on lower side for the upside target of 980 and 990 levels.
Hemen, what about your strategy?
A buy BTST on Reliance Infra. We are at around 408, buy at 408, stop loss 404, target 416. Nameet.
Interesting. Okay, Dharmesh, my final question to you. We're talking about all expensive stocks. Can't not talk about Page Industries. Haven't done that today though, but up another 3.5% at 29,575. This is that one big mover.
The question is, if somebody doesn't have in the portfolio, I can understand if you have in your portfolio, it's a performing company, maybe the valuation is expensive, maybe hold on to it. If you don't have it in your portfolio, would you go out and buy it at the current valuations, looking at the growth ahead?
Neeraj, my own sense is that this polarization in the market will continue for the next 1.5 years. So the expensive stocks, expensive companies will continue to remain expensive because growth is coming there. So the justification about the kind of growth these companies are witnessing and the type of valuations the stock prices are commanding may not be there. It may not be there for extended period of time, for maybe a couple of years more going forward. But that is the pockets which is actually performing, and that is where you need to stay as an investor. So don't look at the valuations so strictly as of now. The type of environment, the economic scenario, the way it is changing. And then one has to keep in a portfolio of the stocks like Page Industries or automobiles like a Maruti or a Hero MotoCorp, Eicher Motors, M&M, Scots. These are the stocks where you need to be glued to for next 1.5 years. So this entire consumption things plays out and you still get a decent return on your portfolio. So very strictly valuation should not be looked into as of now. So Page Industries is definitely a decent portfolio buy.
Okay, that's a buy coming in on Page Industries, which is sitting with good amount of gains. Dharmesh, we leave it at that note. Thanks a lot for joining us and taking us through your views on the individual stocks and also on the overall markets. I want to pull up Hexaware again. There's something definitely brewing in that counter. It just went up in the last half an hour of trade, and the gains are, it's now at 517 or 518, 15% higher. I was just looking at the 520, looking at the futures. They're trading at a huge discount. I don't know if there is any corporate action to be adjusted there. Let's just pull up the Hexaware futures. Look at that discount of almost 37 to 38 rupees on Hexaware July futures. Hemen, if I could take your view on this one, on the charts and the futures trading at a discount.
Slightly perplexing, Navneet. I mean, something like this happens, like you mentioned, has to be a corporate action, maybe some special division which we are not aware of, but breakout came in at 475, 15% OI built up, but I still can't figure out, I don't see the logic for the discount happening, Navneet.
Okay, we'll keep monitoring and definitely watch out for the data here, the delivery data, because it's gone up on the cash side on very high volumes today. Almost 43 lakh shares, 50 lakh shares so far have been traded. If you compare it on Friday's trading quantity, on at least on National Stock Exchange, it was just about 11 lakh shares. So on back of good volumes, it's gone up. So let's see if there is any sort of delivery-based buying or not. The other stock, Sumeet, I don't know if I've taken your view on Max Financial. That's been up and about for the session. Any thoughts there on the charts?
See, the stock has given a good move from lower levels. In last 1.5 months, stock has given a correction, and after giving a correction, it has taken pause at around 410, 420 levels, and from there on, we are seeing a pullback move. This pullback move should continue till 450, 460 level, 460 levels. Current market price is 452. So this pullback move should continue till 460, 465 levels. Once these levels are taken away, then we can see extended move till 480 or 500 levels. I think one can hold on the existing long positions with the trailing stop loss to be placed at 440 levels on lower side for the upside target of 460, 465 levels. And after that, we can see a move till 480 or 500 levels also.
Okay, Max Financial has been up and about, and the other stock, can we pull up KPIT Tech? That's the other one which has gone up. So definitely some action has come in the last half an hour for all these mid-cap ID companies, I would call it. 5.5% higher at day's high for KPIT Technologies as well. Sumeet, I'll come back to you for KPIT Tech on the charts. Can one look to buy at these levels or avoid?
Well, one can initiate long positions. Stock is looking good. The stock is in a continuous bull trend. Immediately there is some resistance at higher levels. That is at around 285, 286 levels. Once these levels are taken away convincingly, we will see a move till 300 or 300 plus levels in next couple of weeks. I think one can hold on the existing long positions, and if anyone wants to initiate a fresh long positions at current market price, then they can go ahead and initiate the long positions for the upside target of 300 levels. Immediate resistance is at 285. Once that is taken away, we will see a move till 300 or 300 plus levels in next couple of days.
Current levels, KPIT Tech, that's the call from Sumeet. Hemen, wanted a view on Bharat Electronics. The stock was up 8 or 8.5% on Friday. Today there's been some bit of cool off, but this is one of those beaten down counters that we've seen when the correction came in for the broader markets. Anything on the charts you're indicating, can today's correction be a buying opportunity, Bharat Electronics?
I think so. Seems like a contra play, Navneet, like you said, deeply beaten down. The breakout would come in at around 113, 114 Navneet on the weekly chart. But yes, I think 2 rounds of positive divergences. Volumes have picked up. We saw an upward bar reversal coming in on the last trading session on Friday. And this is just a cool off after the move. So I guess, yes, from a contra point of view, we're at around 108. I'd keep a stop loss of 101.50, which was the low on Friday. And yeah, it looks like a contra buy, Navneet.
Okay, so can be a contra buy off today's low. Watch out for Bharat Electronics. Under 3 minutes to go for markets to close. Let's head across to Neeraj Shah to find out how exactly today's closing is panning out. And Neeraj, it's been a strong start across the globe this Monday morning, throughout the session rather.
No, you're right, Navneet. Start throughout the session, the performance has been good. Asia has done well. Europe is not doing too badly. And we've done reasonably well. So let me bring up the large caps, up to speed with the large cap performance. Navneet will take you through the entire market then. The Nifty Bank 2 participating, which is an interesting sign today, by the way. Yes Bank and Axis Bank, yes, but the PSU banks too participated. Mid caps and small caps will come up on your screen, and the market breadth today was positive, so about 1.78% for the small caps, 1.6% for the mid caps. I think the market breadth only improved during the course of the show. Let's try and show you what happened to some of the large caps first. And Asian Paints now topping the list of the movers. Actually, Yes Bank and Axis both have come off a little bit from the highs of the day, but still doing reasonably okay for themselves. Vedanta, Hindalco amongst the commodity names, and the big boy Reliance Industries has participated well, about 2% higher for RIL. What's lost out? Actually, well, TCS, yes, Titan, Ultratech Cement about 1.5%, but not too many losers as you see. These three probably still worth mentioning. The rest of the stocks very, very flat, could have moved either direction. So all in all, a good day of trade for the large caps, but as I said, the mid caps and the small caps haven't done too poorly either. Now then the market breadth looking fairly impressive on what was arguably, at least until 1 p.m, a low volume day.
That's right, Neeraj. In fact, for a change, I've got more gainers when it comes to the broader markets, because last few days, the market breadth has been in favor of the decline. So good day. Let me just highlight the gainers. Time Technoplast went up on good amount of volumes today. And finally, as you can see on the screen, the stocks closing with gains of nearly 13 to 14%. Sterlite Technology, that was the stock which was in focus right from the word go. Third straight day of gains. And finally, the news coming in that they've acquired an Italian company for almost 47 million euros, 9% higher for Sterlite Tech, but very, very surprising move coming in from Hexaware Technologies just in the last half an hour of trade. Look at that, ending 21% higher. And we also highlighted for you, there was a huge gap when it came to the Hexaware futures, which are trading at a discount of nearly 40 to 50 rupees. Let's see if there is anything brewing in Hexaware or not, but definitely the sharp move that you saw in just last half an hour of trade says there's something coming in Hexaware. Max Financial is the other one which went up on high volumes. Karnataka Bank, DCB Bank, some bounce back actually seen for a lot of these banking stocks. So good going for the entire space in today's session. Karnataka Bank up 7%, then the DCB Bank up almost 5% in trade. The other one which bounced back today was SRF, and we saw strong moves in the second half of the session for SRF. 4.5% higher for this one. And GNFC, remember that one had an investor meet today in Mumbai, and after post that investor meet, maybe I don't know what was discussed in that, but the stock definitely reacted positively, closing with gains of nearly 6% in trade. Two losers I want to highlight. One is Bharat Electronics, which was up 8% on Friday, so some cool off seen for this one, 2% lower for BEL. And also Apollo Hospital is the other one which has been trading really weak in the last 3 to 4 sessions. Aggressive shorting has come about in this counter, at least in today's session, 1.2% lower for Apollo Hospital. But good news, Neeraj, even if you look at the losers, the losses are actually capped to only 2 to 3%.
Yeah, well, so it's a good start, as you said, to the trading week. Let's just see if that continues. You just need the broader markets to pick up some steam and continue with this steam, even if the large caps were to stay a bit muted. But this is what the picture is at close, and 10,852, 35,940 or thereabouts for the Sensex. It's been a good start to the trading week, as we said. Bring up the market breadth firstly. And then the contributors list. So the market has stayed stable, close to, I mean, slightly over 2.5:1 or thereabouts. But the contributors list and then the volumes would be interesting ones. I mean, surprised by the contributors, not too many losers, and the big boys participating a bit.
Yeah, actually, the rally was seen across the board besides Reliance Industries, which has contributed the most. Otherwise, even if you look at the losers, something like TCS, it's not dragged the index lower by too much. It's just about 7 to 8 points. And finally, let's pull up the participation. I think it'll be interesting to see because a lot of stocks moved around. But once again, the cash volumes, Neeraj, have dropped. If you compare them to Friday's, it was 27,000 crore of turnover for NSE, and it's just about 24,000. So today's gain have actually come in on low participation. Even for F&O, it's below the average turnover of 5 lakhs.
Yeah, well, so that says it all. Final thoughts from our experts. Hemen, to you first. How does this set us up for the rest of the week?
Tina, whatever we've seen today seems interesting, very positively interesting. Maybe the low volumes because of the rains or whatever, but it seems set for a move, Neeraj, and we've spent a long time consolidating. So this 10,850, 10,900 level is crucial. We just almost said, but I think this time the Bank Nifty is going to goad it on. And I think the Bank Nifty is going to surprise and pull the market up because that looks very interestingly poised. So I would be positive, and especially maybe it's going to take a little bit, maybe a little bit of more consolidation, but I think the Bank Nifty looks set to push the Nifty higher. Neeraj.
Okay, let's see if, in fact, IndusInd Bank will be coming out with its numbers tomorrow. That's a Bank Nifty and Nifty constituent. Let's see if that sets any trend for tomorrow's trade. But Sumeet, coming to you, what would your approach be tomorrow?
Well, see, markets are looking good to me. I think immediately there is a possibility that we might see upside move till 10,900 levels. So I think 10,770 should be the stop loss for long positions, and if there is a dip of around 20 to 30 points, then that should be used as a buying opportunity for the upside target of 10,900. And if that is taken away, then we can see move till 10,950 levels also. Till that time we don't see any sell-off, it's better to be on buy side for next couple of days.
Okay, so until the trend changes, might be better to be on the right side, which is maybe the buy side. Gentlemen, both of you, Hemen as well as Sumeet, thank you so much for taking the time out and being with us this afternoon, and have a great week ahead. I really appreciate your time. Well, with that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thanks so much for watching.